All right, Dave Knight here once again at Knight Capital Management. Today's video is called Barcharts Explained, and we are obviously recording this in high definition this time around, as we mentioned in the overview video, and we're going through and adding some surprises to make this kind of interesting if you're watching it for the second time through. What you're looking at right now in front of here, let me just click it a couple times so you know which bar I'm talking about. We're looking at this bar in front of us, and this is one solid bar that you're looking at in the bar chart. You see a couple bars here, and you see some lines, and makes it look like steps, sort of type of look or whatever. But there is four components that this particular bar here, when you're looking at it, and what I want to do is take a minute to define each one of these areas here for you. If you're new to trading, this will help you understand one bar, and then you put a bunch of bars together, then you can kind of start seeing a pattern or some kind of analysis. Terms that come out of this is technical analysis and obviously fundamental analysis, but as a technician by trade with a fundamental shift to the way I believe in a concept called volume spread analysis, or in other words, called VSA. And I believe in a concept called volume. Actually, if you're looking and breaking it down, it's price action, and then you have your momentum, and then you have your volume. All three components need to be in that trade to make it a profitable trade, more times than a losing trade, in my humble opinion, in the way I approach my trading and every trading strategy that I develop. And the eMini bull bear method that we're looking at, and what we're going to do here is we're going to take the eMini bull bear strategy, and we're going to develop this easy strategy and show you how I put together a strategy, how I look at it, and then put it together, develop it, and then eventually go through the test phase, and then obviously moving into, all right, let's trade it. What we're looking at in front of us with the left notch right here, this is the open of the bar. There's four things you hear: open, high, low, close, as it relates to a trading bar. And you have an open, you have a high of the bar, you have a low of the bar, and then you have the close of the bar. And hopefully this is, if you know this right here is the open, then deduction and reasoning should help you coincide and conclude that where the other bars are. This is the high of the bar, obviously. Here's the low of the bar. And over here is, on the right hand side notch, is your close of the bar. So once again, we have the open of the bar over here on the left hand notch. You have the close on the right hand notch, and you have the high here, and then you have the low of the bar over here. Now, if one bar by itself doesn't help you in your trading decisions, and you know, if this was just one, this could be one day's data, 1 second data, it could be 1 minute, 5 minute data, it could be, this could be a one bar. We could be looking at bar charts going across the board right here, and our bar charts could be daily charts. So for instance, if we just go out here and take this is the 29th that we looked at that day as far as the trades. But if we go out, we can look at it as a 1 minute chart, we can look at it as a 3 minute, a 5 minute, you can go out and look at it 15 minutes, you can look at it 60 minutes, you can go out and look at it as a daily chart, you can go out here and actually look at it even further out. I mean, you have weekly, monthly, quarterly, yearly charts. So it depends on, here's a weekly chart. So each chart gives you more information. So if you're looking at a weekly chart, what you can see right now is that we had this trend that went down through here, correct? And then we had, and now you're looking at a weekly chart here, and you see kind of a trend that's went this way longer term on a weekly chart. Now you can adjust this out to a yearly chart or a monthly chart. You can see what for the time period that we look at, so defining that trend again. But well, all that is not really helpful as a day trader as it relates to taking on individual trades. It's helpful to know what the market bias is. So I like to look at a 5 minute chart, especially when it relates to the eMini chart and so forth. And what we know about this particular trade on this particular day, on the 29th of July, I know it says 7:30 up here, but I'm physically looking at the 29th right here. What do we know? We have a trend, and we have a trend that established itself through here, basically, we have another trend that you can see that established itself later in the day, and it went up. And late in the day, you can see one more trend that went down. Inside this day, you see some time period, that a little of a trading range or come into the market here. See this little area right through here coincides with the lunchtime period. You'll usually see that a lot of times, an awful lot, that this period of time coincides with your trading range in lunchtime. See another little range in here, and then we see some ranges up through here as the market decides if it wants to go higher or not at the end of the day trading. So what we can determine in our trade and also in what we're going to continue to develop on, we're going to look at the bar chart and we're going to keep on defining it. We're going to add some indicators out here. We're going to start defining trends a little bit better, and we're going to eventually get to where this particular simple trading strategy takes signals as we move forward. Now this is just one easy method that I use and employ in the eMini S&P, and this is why we're giving it out for free, because it has a good win-loss rate and it has some good potential for you as a beginning trader or a trader that's looking at coming into the futures market to get in the win column. And we're looking at only one contract in this particular method, and we're looking for a 3-point profit target with a 2-point stop. So in other words, like we talked about before, we're looking for a $150 profit objective with a $100 stop. This is Dave Knight here at Knight Capital Management. I look forward to seeing you on our next video. We'll bring out the next video just as soon as I can get it recorded. So we'll see you then, and look forward to talking to you more about our indicators and crossovers, volume, momentum, all the price action and so forth, and the concepts of how and what I believe in as a VSA trader. We'll see you on the next video real soon.